In the last video, we covered concepts which allow real-time analog to establish analogy or affinity between various intervals of trading data. In this one, we'll start talking about tools that real-time analog gives you in order to help you put together a bigger picture of market behavior and help your forecasting. While discovery of individual affinities can certainly be enlightening, if not fascinating, the true power of real-time analog lies in its ability to help inform a comprehensive idea of various analogies from multiple perspectives, intervals, and timeframes. What does a particular analogy imply, if anything, about likely future behavior based on the totality of its historical occurrences? If a particular instance of market behavior is interesting because of an affinity against a particular template, is it not even more so if affinity against multiple templates is detected simultaneously? And finally, real-time analog also lets you inform yourself about the respective setups that led up to the analogies you're looking at, or in other words, the context in which some behavior took place. To that end, there is context functionality in real-time analog. The idea is almost entirely analogous to affinity templates, but on a longer time frame. The concept here is simple. Even though we're day traders, and even though real-time analog is, at least for now, a day trading tool, that doesn't mean that we don't care about or should be oblivious to a wider context in which day trading phenomena we concentrate on happen. So just like we have the 8 affinity templates on short time frames and resolutions such as 5, 15, or 30 minutes, there are 3 more long-term affinity templates, which are sort of stealthy in the sense that they aren't listed anywhere by name. But anyhow, these templates can be described as the following: 6-day interval with 1-day resolution, or daily; 6-week interval with 1-week resolution, or weekly; and 6-month interval with 1-month resolution, or monthly. All intervals end with the previous day of trading to today. These 3 templates then produce lambda values just like the daily affinity templates do. This way we can compare contexts or setups of any 2 dates. If I click on the Context tab here in the Explorer panel, what I'm seeing is the context report. This is the only report generated before the trading starts for the day. In fact, it's generated at midnight UTC, and you can look at it first thing in the morning. This is possible because the dates this report shows aren't necessarily similar to today in the way that they progressed, but in the way that they were set up. In fact, real-time analog takes a snapshot for each of the 3 long-term context affinity templates, the daily, weekly, and monthly for today's date, and analyzes it against similar snapshots that exist for every day in the historical database. The result is the report you're seeing. Lambdas that each template generated are visible here on top. Dates are initially sorted by the total sum of daily, weekly, and monthly lambda. If I click on the top date here, it'll be charted. Charting from the context report is pivoted around the previous day's close. For instance, you can see the horizontal line on the top chart set to 1876, which is exactly the close of yesterday's trading. The scaling is also to yesterday's close. So for instance, what you can see from this chart is that March 22nd, 2007 opened what in today's market would be something like 4 points in the green. But let's also look at the bottom chart. This is the context chart, which again shows a 1-day candlestick series centered around the previous day of trading, plus or minus 6 months. It's also pivoted around the previous day's close. So here, the close of the previous day to today, which is Monday, May the 5th, is lined up with the close of the trading day previous to March 22nd, 2007. As you can also see, we're getting fairly low lambdas on both the daily and monthly scales. I think even a cursory glance at the context chart is sufficient to see the analogy. We had arrived to an all-time high by basically an identical slope. That all-time high had then faltered, and we were trying to reclaim it. Exactly a similar situation as we are in right now. Also, for what it's worth, we can see that if things go on as they did then, we're in for a nice double top around S&P 2000 before we turn around sometime around September or so. And on the top, as always, you can see how that date actually panned out. Now, it seems that March 22nd, 2007 didn't turn out very analogously to the way that today is turning out so far, at least. And I know this because there's a column called Templates Today. This column will show you the number of templates showing any appreciable affinity with the trading as it's happening so far today. If you mouse over any of the values, you'll see exactly which templates real-time analog has found affinity with, as well as their corresponding lambda and epsilon values. So if we look at this date here, I think that an analogous opening is pretty apparent. Now, as I said a second ago, these dates are sorted by their total daily, weekly, and monthly lambda. That's not the only way that we can sort these dates. In fact, by clicking on the column captions on top, you can fine-tune the way that real-time analog sorts dates in the context report. Being that real-time analog is a day trading tool, daily lambda is always of interest to us. So clicking on weekly will sort by weekly plus daily lambda, clicking on monthly will sort by monthly plus daily lambda, and clicking on daily will sort by daily lambda alone. So if I sort by monthly here, let's find a date that has monthly lambda of 0. Oh, here's one. September 17th, 2013. If you look at the context chart on the bottom, I think it's pretty eerie. One thing that such a chart could, for example, tell us is that when we're at the depths of these lows, we never stepped out of the pattern that is well established over the past couple of years. Interestingly, actually, this is further borne out by the fact that you have these low monthly lambdas occurring relatively regularly over the last couple of years, every 3 or 4 months or so. So in addition to the one that we already saw, here's another one from November 2013, and here's an earlier one from April 2013. This is nothing if not a manifestation of the simple fact that the market has been on a remarkably steady upward trend that also remarkably periodically every 3 to 4 months or so gets punctuated by one scare or another. If and when the precedent set by this pattern breaks, real-time analog will be the first to let you know. Needless to say, this is just a simple example of the kind of conclusion that you can draw from looking at this data, but in the end, the possibilities are only bound by your perception and your imagination. As you may remember, when we were looking at the dates in the context report, we could easily cross-reference them with analogies detected against daily affinity templates. Cross-referencing in the other direction is just as easy. In fact, wherever a date is shown in real-time analog, it contains a column titled Context Proximity. Context proximity is a set of 3 lambda values, one for each long-term or context affinity template, daily, weekly, and monthly. It's a value that can obviously be calculated for any 2 dates and is generated for each date shown in real-time analog against today's trading data. So this way you'll always know how the setup of a particular date you're looking at compares to the setup of the current day. Now if you look right here next to epsilon, you'll see a column titled Also Represented. This column is very similar to one that we saw in the context report that was titled Templates Today. This is also a general column and is present anywhere dates are listed in real-time analog. What it shows you in this case is the number of affinity templates against which real-time analog has detected affinity in addition to the one that we're looking at right now, opening 5 minutes 6 bars. Long story short, anytime you see a date listed anywhere in real-time analog, it's always easier to see all detected analogies against all templates that have been processed so far today. In the next video, we'll talk about the consensus panel, which helps you make sense out of various multi-template analogies. But for now, let's look at it from a different angle. So now that I have all of these dates that show a high affinity against a certain affinity template, is there anything consistent in the follow-through that I can use to inform my forecast about the near future? So indulge me while I do the silly thing here and pin every single date that got returned with lambda of 1 or 0 for this opening affinity template. This may be a good time to mention that the opacity of clouds is actually dependent upon lambda, so you can see here that lambda 0 charts are actually less transparent than lambda 1 charts. So if you take a look at the daily chart on top and all of these dates in totality, what would you say? Obviously, they all share a very similar opening, and they're lined up to the pivot point at 1871.5 at 9:55 a.m. But what happens subsequently? Now, again, I'll discourage concentrating exclusively on directional predictions, and I think if you're sophisticated, you can look into this and see far more than things like it's going up or it's going down. But in this case, and for the sake of simplicity, let's just say that this is an extremely bearish pattern. So if you look at all of the dates that had an opening similar to today's, or at least similar enough to pass a threshold of lambda 1, pretty much every single one of them is bearish, except for maybe that one, but even that one deflates by the end, as you can see. And here, if I zoom in on the template's time interval itself, you can visually see the analogy in the opening. So anyway, that's a pretty cool piece of information to have, but did I really have to pin every single date from the report in order to know of the bearishness of this pattern? The answer is of course no, and that's the purpose of these clock gauges that you keep seeing above many of the groups of dates that you run into in real-time analog. They indicate the probability in percent that trading will be above or below the price component of the pivot point, also indicated by the blue horizontal line, at the time that's listed below each gauge. This probability, of course, is not obtained from some magic crystal ball, but is purely based on the behavior the market showed subsequently to previous occurrences of this pattern analogy, as shown by the dates and only the dates included below the gauges. In fact, if I alter the set of dates in any way, for example by increasing the threshold to 2, the gauge values will change in tandem. The probabilities are calculated for the top of the hour following the time component of the pivot point. In this case, that's 9:55 a.m., and an hour after that, and at the end of the day. This adds the depth of a time component to a directional prediction. It also happens to be very convenient if you're a Nadex binary trader like me, since these times are exactly the expirations of contracts available to you at the time the report is generated. In parentheses next to the timestamp, you can see a whole number that indicates the sample size of the data the gauge value is based on. In order to be displayed, each gauge needs a sample of at least 3. Let me just underline something. These are not meant to automatically be taken as trading signals. They're directional summaries of past behavior following a detected analogy. To turn them into a signal would be an active act by the trader, in effect assuming this consistency to be predictive. At times this is the right course of action, and at others it's not. Real-time analog certainly doesn't suggest you should necessarily make trades solely based on affinities by singular templates. In this particular case, the consistent bearishness is quite striking under all thresholds, and I personally would be pretty curious to trade it, but real-time analog imposes no opinion on the subject. And that concludes this video. In the next one, we'll be talking more about how real-time analog can help you unify all of this data into a larger picture.